Stock markets in Europe are currently deteriorating, with the FTSE 100 index currently off about 65 points, the DAX in Germany off around about 45 points, and the Euro Stoxx 50 index down around about 18 points. US stock futures are also sliding. The Dow Jones Industrial Average front month futures contract is currently off around about 97 points, while the S&P 500 index is lower by 13 points. In the currency space, the dollar is paring back some of its losses. It had a terrible day yesterday, however, a bit of respite this morning, and other FX currency pairs are somewhat subdued. In the commodity space, gold is currently up about $6. It had a very ugly session yesterday, and that was on the back of some worries about the US government shutdown. We saw a massive slide in gold prices below the $1,300 per troy ounce mark. And when it comes to the core government bond space, we are seeing bunds and gilts in favour. The UK gilts are currently up around about 10 ticks, while the German bunds are up around about 14 ticks. Good morning, I'm Ishaq Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going in financial markets today. So, of course, the US government's partial shutdown, in which a number of agencies, including some 800,000 federal employees, have been sent home on unpaid leave. Agencies have been shut down, and markets are somewhat concerned about this, given that this could be a protracted affair. Now, there are some expectations that this could be resolved quite quickly, with the Republicans and the Democrats being able to find some common ground. However, they stand very much divided on the issue of Obamacare, President Obama's healthcare plan. The Republicans are quite against it. At least one faction of the Republican Tea Party have vocally expressed their displeasurement with such a plan, suggesting that it will hamper economic growth and it's not the right step for America to take at the moment. So going into this session, we've had President Obama speak yesterday, almost giving the Americans and the world more information on his healthcare plan and how it's the right plan, suggesting that he's not going to negotiate or give anything to the Republican Party. So we are still divided on the issue when it comes to the US Congress. House representatives and the Congress itself are now trying to figure out where to take this next. We know that we have the talks for raising a fresh budget by September the 17th of October, and the worry is that if we don't see this happen anytime soon, we could see a significant hit on US economic growth. Forecasts range from somewhere between 0.5% to a knockoff effect of about 1% for fourth quarter GDP. Now, at the same time, we are also having to look at what's going to happen with raising the debt ceiling. They have to come up with a way to raise the debt ceiling by the 17th of October too. Now, they've done this 45 times since Ronald Reagan's presidency, so this is not anything new for Congress. It's a routine step. Now, when it comes to why Congress is doing it, they don't have anything. There's no mandate for paying this particular. When it comes to raising the debt ceiling, there's no mandate when it comes to spending more money. They don't have to spend more money. President Obama isn't essentially asking them to depart with more cash or adjust the amount of taxes that are imposed on the American people. Really, what the Congress is doing is paying for the amount that the Treasury has already spent. So something that the Congress has to do now. The risk, again, there is if Congress cannot agree on a way to raise the debt ceiling, then essentially the US could possibly default, which means another sovereign debt rating downgrade, similar to the one that we had in 2011. that is driving some of the mood in the market this morning. We did have a better day yesterday. There is a silver lining to all of this. That is that the Federal Reserve is very much unlikely to taper quantitative easing, given that this is in the backdrop. Once this is solved, then there's a possibility that the Fed may look at tapering quantitative easing, but until then, there's no reason for the Fed to do so, and they will hold back in the October meeting. At the same time, it's worth mentioning that one of the agencies that have been closed is the Bureau of Labor Statistics, the agency that compiles the non-farm payrolls. It has been confirmed that we will not be receiving, or we will not be seeing the release of the non-farm payrolls on Friday, and that was for the month of August. The month of September, rather. Instead, investors will now have to really focus on the ADP release, which is out later today, being the only real good gauge of labour market health in terms of how many jobs the US is generating on a monthly basis, until we do eventually see the release of the non-farm payrolls, which could be after the US government is resuming back to its full form. Other stuff that we're looking out for is, of course, the Eurozone's, the ECB, rather, the European Central Bank's policy meeting. Now, they're not expected to say anything when it comes to changing their policies. Interest rates to remain at record lows, and at the same time, no suggestions of what they're going to do with LTRO and any sort of additional measures to stimulate the economy. And we may get some more information from Mr. Draghi about how he sees the current events in the Eurozone. We have to remember that we are seeing a political drama and uncertainty playing out in Italy at the moment. Enrico Letta, the current PM of the Grand Coalition in Italy, he's had he had a very turbulent time over the weekend as Silvio Berlusconi from the centre-right party, a very well-known politician, as we all know, he pulled out 5 of his ministers, essentially putting the Grand Coalition in a state of collapse, or at least at the brink of collapse. Now, Mr. Letta is going to be facing a vote of confidence today. If he doesn't pass it, then we're going to see new elections. If he does, we're going to see a resumption or a continuation of this current Grand Coalition with new ministers to replace the ministers that Silvio Berlusconi has pulled out. At the same time, there's also been reports that Silvio Berlusconi himself is facing a revolt within his own party, with some members vocal suggesting that they want to continue with the Grand Coalition. So that is something to look out for today, and that's also driving a lot of the market sentiment. That is all for your daily market bite. I have nothing more to say. I will speak to you guys tomorrow, and we'll discuss what's going on then. Cheers.